Hi everyone, welcome to the St Albans Property Meet, September 2025, and it's getting darker as you probably can see it. Craig.
How you doing?
Oh, good, and thank you for being here. He's got some great questions to add value around stamp duty, land tax, so ask away.
Yeah, so if you're buying a property and it's got a garage to the side, is the garage deemed to be residential as part of the garage? Because you could technically rent a garage out to somebody as storage or whatever. So is a garage deemed to be commercial or is it deemed to be residential?
Really great question. It's a common question. If I've got a residential house and that's the garage associated to the house, the default is as part of the house. So therefore residential because I live on it, and therefore the stamp duty, land tax in this case will not be affected. I think there was another example that you asked me later is if the garden now is split, and then sold, there is an argument because land by itself has different rules. It depends on what value that land is sold and whether it was still part of the property. Because people don't realise there's so many issues to this.
So if you do a title split, and we've split off one bit of land on a recent project, that land is just land. So it's got its brand new title.
If it's no longer part of that property, and it's in different entities, and then that entity sells...
Put a new fence up between the two?
People have done that. It depends on whether, when you do a title split, by definition, normally the lawyers won't allow you to keep it on one owner.
The new plot has a brand new title with the
and they normally tend to, but they normally have to ask you to actually split it entities-wise, so you wouldn't have it in your own name.
Well, we've sold it. So.
So when they've sold it, and then that land then it's commercial until something is built on it. Because land, by definition, normally is non-residential. In layman's terms, which means commercial. And therefore follows...
Well, residential means can you reside in it? And if it's just a bit of land, okay, you can take a tent.
but the thing is, if the difference is, if that piece of land like the garden is still part of the residential, they will say it's part of the residential property, just like the garage. So therefore, it won't be non-residential or commercial, and therefore affects the stamp duty. Also, I think you asked a question about VAT, didn't you, on that as well? Craig loves to get value out of me every time he sees me.
That's why you come to St Albans event. You get some great tax advice, so just buy Z a drink, it's easy.
Non-alcoholic.
I just said a drink, I didn't say it was alcoholic.
I have people following, they'll be like, has he let us down, he's drinking all sorts. I don't, for normal reasons.
Well, I have got one on the cuff for you. There is an organisation where you can rent your drive. So if you live, say, near Twickenham, you can rent your drive to people to park their car. Does that then mean your driveway is now commercial?
Really good point. Very good point. I would have to actually check that because the issue is...
I didn't tell him that one beforehand, so he's got no advice.
The reason I have to think that is because there's a lot of cases being on this particular point. And it's whether that is considered a separate aspect. If it's on the same title, even if you're renting it out, I think you will struggle to get non-residential because the current thing is very aggressive against the taxpayer.
Well, I'm buying a house that's got a triple-length driveway. You fit 3 vehicles along there, you know.
I think you would have to actually separate the entity and not be part. The reason why, I'm always on the taxpayer side, but in this case, it's HMRC following the rules. The reason being is, if that is still part of your main house, that's part of your principal residence. So therefore, you get a benefit when you sell the whole thing for capital gains tax. So they will say, hold on, and a benefit for inheritance tax as well, because you get the main relief, the residential nil rate band that can go from 325k to 500. So if you have it, you can't have everything. So you have to decide, what do you want?
Do you take this benefit or that benefit?
Because if
you weigh up the numbers and see which one is the best.
Absolutely, and always get good tax advice. Do not go on assumptions or no disrespect, because I'm careful what name I use, Dave, Chris, whatever it is, told me down the pub, and rely on that. Because that's not going to help you when HMRC turn up and challenge you on it.
Well, there's been a recent case in the news, dare we mention it, where somebody, let's be nameless on it, somebody sought expert advice and it turned to be incorrect about stamp duty.
I would challenge what she considers expert advice, this particular person. audience probably know. I don't want to get political because I get like you're being disrespectful to the current regime and the one. I've got no favoritism amongst all of them. My personal view, they're all hard work. They're not helping entrepreneurs. I don't believe she got expert advice, because if she got expert advice, it wouldn't have been from the lawyer. In that case, legal people are not tax advisors. Tax advisors are not lawyers. Tax advisors would not advise you on the conveyancing your property and doing the stand inquiry.
That's the classic question when a conveyancing solicitor fills out your SDLT form. They are not tax experts, they're conveyancers. So they always put a caveat in their thing saying it's, is this correct? Because you have to take responsibility for your tax. You should therefore talk to a tax advisor.
I had this conversation with a client very recently and a debate with a lawyer. I asked him a simple question. This seems to be a complex transaction. It's not a bog standard one. Why are you doing the return? Are you responsible for the advice that goes with that return and what the output? No, I'm not. So why are you doing it? And if the client then carries on, then we're not liable, that person is. Because the compliance of the SDLT, i.e. following the rules, is one aspect, and the tax savings is a different aspect. But you need to, especially if it's not bog standard. And what I mean by bog standard, I'm buying a house, it's my first residence, probably don't need tax advice. Depends on the scenario, but I'm trying to make it very easy.
Doing anything more interesting or, a bit more tricky?
Anything that's outside the comfort zone, and if that law firm hasn't got an inbuilt tax advisor, which some large firms do, you must get tax advice, because ultimately you are liable for the ins and outs of that. And this is a reality shock to a lot of people.
What if that lady can claim against the professional indemnity insurance of an expert counsel?
My understanding is, when I'm looking at the stuff, is the lawyer would say, with that exclusion clause, I'm not a tax advisor. If your stuff is not straightforward, I'm not responsible. You should seek other tax advice. My issue, no disrespect to the lawyers, are the ones that don't make it clear. They just stick it in their terms and conditions and they leave the client, the taxpayer, at the mercy. And then they get a nasty letter, or in this case, get told in the whole press that they've broken the rules and they should lose their job over it. Or get a heavy penalty and lose a fine. Because HMRC will ask you, did you take tax advice? If you haven't, that's straight away a minimum 30% penalty called careless. And that's what this person's facing. And interest on tax and the tax. Let's not forget it, the additional tax. If you deliberately, and it's shown deliberately, the fines get higher. They can be 70, 100, and longer it goes, more painful it can get. So my recommendation, without scaring people, probably scared a lot of people, is please get advice from the right people who understand property, and they are property tax-wise specialists on stamp duty, land tax in this case. And VAT as well.
Let's see what happens in the news.
Is there any other stuff on this?
That's fine.
God, I love St Albans Property Meet. I hope you got value in this and hope you sort of understand. Don't get in problems like some of the people.
Any questions? Ring the man. Z's the man.
I try my best. We always look at every stage and it has different advice. We also have retained of super specialists who are looking at every little bit and making sure our advice is up to date, because things change. What was allowed 2-3 years ago or a year ago won't be allowed now, so you need to check every time, and it will help you a lot, protect you, save you money, and potentially help you make more money with the savings that you got. Craig.
It's not how much money you earn, it's how much you get to keep, so get some great tax advice.
Thank you so much. Hi everyone, as you know, we love speaking to entrepreneurs, especially young entrepreneurs who are start their journey. We've got the lovely Cindy.
Hi, thank you for having me.
Perfect. And Cindy, you're just finishing your university degree.
Yes, so I'm in my final year right now.
Excellent, and you're looking to get into property by doing property sourcing.
Yes.
Tell us your strategy for property sourcing so that people know what you're going to do.
So I'm a property deal sourcer and investor. So right now I have one HMO right now in Nottingham, and I'm thinking to expand my portfolio. I also do deal sourcing in the Midlands area, whether that may be Birmingham, Coventry. I source deals, any property strategies, whether that be rent to rent, estates, HMO, and even social housing. That's what I do.
So for the audience there, if you're a landlord and you're in the Midlands, Cindy's going to help you get those properties rented out, give you a fixed amount of income, and get you to someone who can manage it, and then they will make money on nightly rents like service accommodation, and it's a win-win everywhere. So how did you get into property, and how did you think about this is going to be my strategy post-university?
Oh, very interesting question. I mean, recently I actually gave my life to Christ, and through prayer and fasting, the Lord actually opened the door of real estate. So I actually pursued that journey last year, and it's been trying to find my feet and how am I going to get through this journey. But ever since I gave my life to Christ, literally my life has changed, and that entrepreneurship was literally how God revealed me my purpose and my career in life. So that's how I started, and this year I've started my property journey seriously. I now have a business partner. Her name's Benedicta.
So your business is a JV between both of you? You're both doing it together, or you're doing separate businesses and helping each other?
We're actually doing it together. So in every deal that we have, we're doing it together.
Oh, wow.
So it's not more of a JV, we actually do things together. That's why we can manage to do investing and deal sourcing as well.
So what I mean by JV, joint venture. So what happens when you've got two or more people in the same thing? We used to say it's a joint venture because you're both combining. There's loads of ways from a tax perspective to structure it, but it's really important. I guess one of the key things you're looking for is investors, because you've got quite a lot of deals, or you're looking at deals, you're looking for people to help invest in the deals. So what would be your ideal investor, what you would be looking for?
So I did mention that with deal sourcing, I do source around the billions, but I am also more of a bespoke service to my investors. So if my investors are looking outside of the Midlands, I will still be able to cater that. So investors that are looking for normal rent-to-rent deals, SAs and HMO, but I'm also sourcing back and below market value deals as well. So I also do purchase deals. Right now I do have the small clientele with purchase investors that are looking for flip deals at the moment. So that's type of investors I also do work with, but I am also flexible with the investors that are coming my way.
Let me jump in, there's a lot of stuff there. Thank you, Cindy, for sharing. So you're looking for investors who may want to invest in some of these deals. Also, you're also looking for specific type of deals because you have investors as well. Life of a property sourcer. What's the long-term strategy? You told me you want to get into property yourself to hold and be an investor. Is there certain types of properties you're looking to invest in yourself in the longer term?
So longer term, I am looking for development deals, thinking of doing renovations and BRR deals, flip deals.
Wow.
And development.
What was the last one you said?
Flip deals.
Flips, right, yeah, flips.
Yeah.
So there's a lot of stuff, and Cindy is a bit nervous because her first time doing this.
It is her first time.
But do you know what? This is when you're inspired. You're never at age, you're never too young, never too old to be an entrepreneur. Got to thank Cindy. I think she's done a great job.
Thank you so
Cindy.
much for having me.
Perfect. Thank you so much. We've got the main person at the St Albans Property Meet. The person's running it, Richard.
Good to see you, Z. Good to see you again.
Perfect. And he's going to give us some insight a lot of entrepreneurs don't know. And this is the beauty of St Albans Property Meet. So many different people you meet on so many different things. You've been telling me earlier that you're helping businesses with AI. I know a lot of people band it out. How are you making the difference?
So, you know, AI is the hot topic at the moment.
It is.
And I think a lot of business owners, they're hearing about AI and they know they need to integrate it into their processes and how they do things, but they don't really get it, and they're a bit worried about it because, you know, their competition may be using AI to help them grow and scale their business. So they know that they've got to start embedding it into the business, but they don't really know how to go about it. So that's where we're helping people now, is helping them understand AI, but understand it from a business owner's perspective, not from somebody that's actually using all of the tools.
So if I break it down, because we use AI in some of the marketing stuff that's done to help cut it and all this stuff. I'm saying this more, my team do it. What is the key bits that you found AI has made a difference to a business? The key top two, three.
The key thing is it makes the whole business much more efficient. So you can achieve a whole lot more in a fraction of the time. You're talking about marketing. You know, you can build together a whole content calendar with all of the posts and the graphics and the emails and things like that. You can do all of that in a fraction of the time that it used to be take, and it's better. You know, the output that you get is better than something that you might have spent a few days over creating. You can do it within a few hours. But the key thing here is, as a business owner, it's not you. Okay, you have a person within your team that can use the AI tools that are currently available. You know, ChatGPT, they know prompt engineering, how to give the right prompt to ChatGPT, so you're going to get the best results out of it. As a business owner, you don't need to worry about all of that. You just need to have the right person within your team that can do this for you. So that's where we step.
We've used it in a few different parts of the business already, and a lot of the team are starting to embrace it, and it's going to get more and more, especially on the accountancy side.
Yeah.
I would always be careful when you're the tax advice, because there's so many errors, because you don't know what you're checking. Same as legal, you know, it may give you 60-70%, but there's so many variations on your own scenario. And I think that's the bit of problem a lot of people are finding with AI.
You know, with AI, so a lot of people are worried that AI is coming along and it's taking their jobs, and there's going to be less jobs around. They're going to be out of work because AI is taking over. It is absolutely not going to take jobs. It's changing jobs. So, you know, if you're an employee, if you're working for a business, you need to understand AI and understand how that is going to help you in your job, because as an employer, you want people in your team that get this stuff and that can use it, and that's how it's changing the jobs. It's not replacing jobs. So, you know, it's really, really interesting. Wherever you are, whether you're a business owner, whether you're working for a business, you've got to get this stuff, okay? As a business owner, you don't want to become a Blockbuster or a Woolworths or whatever. You know, you've got to see what's happening, and you've got to embrace these technologies. Be the Netflix, be the Amazon in your own particular sector, and have a team that can use the technology and that just get it.
I think I was having a conversation with someone today, and they said, don't look at the things that you don't need to do anymore. Look at the opportunities you can do.
Yeah.
And that's the same across all types of business, whether it is
Totally.
marketing, sales, tax, accounting, the list is long, operational. AI will help enforce that so you can add more value, and in a short period of time. That's the difference, man.
That is the difference. And, you know, accountancy, you look at all of the accountancy software packages, whether it's Xero, whether it's QuickBooks, whatever it is, they're building more and more AI into their software. So yeah, it's about mastering this. When it comes to marketing, like I say, you can create content, SEO, all of these things by using the right AI tools. Then you can just be highly efficient in what you do.
I think that is the future, and the future's here, and it's going to get more accelerated. And the people that embrace it and utilize it and spot up structure their business, there is going to be a major shift how people are doing stuff to how they're going to do in the future. And there's going to be, I think we're in that AI age where everything is going to accelerate even more rapidly than it was before. And
Massive.
just got to embrace it.
I'm on ChatGPT several times a day. You know, if I've got a thought in my head, I call it my thought buddy. Okay, so I'll go on to ChatGPT, and I understand prompt engineering, so I will put a prompt in there to get it to question me, to interview me, to find out what my thoughts are, and then it can come back to me and make recommendations and these sort of things. But it's 80%. You've got to then, the human input is checking that, make sure there's no hallucinations in there, you know, and expanding on it.
You'll be blown away how many people I get stuff from ChatGPT. When I look at it, it's only as good as what you ask it, and also is it up to date, because they're taking everything that's all out on the internet. Whether it's wrong, right, it doesn't know the scenario, it gives you a rough idea, which is a great thing because you sort of know what to focus on. but it's not the end game.
No, it's
I
definitely.
actually think it's going to help add value to most professional services, not detract, if people embrace it.
Yeah.
It's going to be huge. We're going to be talking to Richard about a lot of stuff. I've been bugging him about podcasts, about AI, outsourcing, entrepreneurs. You got to come to St Albans Property Meet. You only not only learn about property, you learn about business as well. Richard, thank you so
you very much, Zee. Thank you, guys.
Thank you. As you well know, when you're talking about property, you got to talk about finance, especially commercial finance. We've got Grafton here. Hi, Grafton.
How are you doing, Z?
Loving it. It's been so many things we've had conversations about. Wanted to talk to you. So many people asking about when you're buying a business, how can finance help you when you've got a good commercial finance broker? Right? Please let the audience know, with a commercial property and without commercial property, what loan to value can they get?
With property, obviously, you get higher loan to value. So
What does it get up
You
to?
got to pay 80%
Of the purchase price?
of the purchase price.
What is that purchase price? Is it based on a business valuation, obviously?
It can be based on both.
Right.
Depending on the lender, it can be based on both the bricks and mortar, as they call it, and the value of the property. If the property's got goodwill in it,
Yeah.
strong balance sheet, excluding the property, that adds value.
Right.
So, as they say, if the NTA, the net tangible assets, are strong, it adds good value to it.
So, obviously, if I've got no property, what's the loan to value of the purchase price that you're normally going to get?
65, 70%.
So you can get up to 60, 75?
Yeah.
I wouldn't recommend someone paying out front.
Strength to
okay?
the business.
Got
The
it.
strength of the business is key. The strength of the management is key.
And the profit, EBITDA, earnings before interest, tax, depreciation, amortization, how many multiples?
Around 5, 6.
So they can go up to 6 times the profit. Normally, if I'm buying a business, pay more 2 or 2 or 3, depends how big it is, the issue.
And again, it's the industry takes a lot. Say, for instance, if you were buying like a doctor's surgery or
Yeah.
dispenser,
Talk about dentists. I've been
like
talking
that.
to some dentists
Yeah.
recently. Buying a dentist practice, so you've got a
Right.
trading business.
So exactly, they can get up to even 5 times.
The multiple
Because-
of EBITDA.
Yeah, because they are more or less guaranteed income.
Accountancy practices, how much?
Not so much. Accountancy practice probably about 2.
What?
1 or 2.
What kind of everyone
Yeah.
needs a good accountant tax advisor. You just committed blasphemy in front of me.
Solicitors and accountancy practices
What?
are not that lucrative when it comes to.
Don't really defend too many solicitors, sorry. Right? But come on! Everyone needs a good accountant tax advisor.
Everyone does, yeah.
Oh my days. But dentist is obviously more, it seems like.
Well, yeah, because a lot of, when you look at it, accountancy practices and even solicitors, it's the person. So the goodwill element is a lot higher. So
Got it.
if you walk away from your practice and somebody else buy it, some of the clients are going to leave because they get on well with Z. They don't ever get on well. Whereas in the health industry, it's less likely that.
Right.
Care home maybe, but less likely because people are always going to want medication. They're going to always want optician.
What multiple year not
Daycare
taking nurseries?
Similar sort of thing around 4 or 5.
Wow.
They're
That's
always
interesting.
in demand, and because the government has a hand in it as well in contributing towards
Through like
the 3 hours and
hours.
all that.
Wow. This is the value you get at St Albans Property Meet. So if I got a property bricks and mortar, does it go more than 5 higher? Is it that and so much percentage of the property value, or is it all in at that?
It's all in.
So if I haven't got the bricks and mortar and I'm leasing, will I get a lower EBITDA return?
You get a lower EBITDA return because they haven't got like a
So it won't be 5, will it be
asset.
3, say?
Probably, yeah.
Right, so
But then again,
that makes
the
sense.
strength of the business is the key.
Depending, you've got management structure, revenue, can they manage it?
Experienced manager, proven track record, all that sort of stuff.
So if they're million plus revenue, they tend to have management, so it doesn't even matter about the owner really, does it? Because you've got the structure in place, and if you've got, I guess, so many years of history, no?
It is, but again, if the owner has a really good track record, for instance, care home, somebody buying, I'm not a care home buying out the previous. If this person is buying it, got a really good track record, the lender looks at that and think it's less risky, because with lenders, everything revolves around the risk to them.
Of course.
It doesn't matter the
Are they going to get their money or not?
It doesn't matter the value. You can have something that worth £5 million if you sold it, but it's the risk to them.
Got it.
If the risk is high, it's less loan to value. If the risk is low, they're happy to stretch.
And the profit is EBITDA, but can you do add backs like pension contributions, things like this?
Yeah.
Because remember, they're linked to how much for tax rule management and all this. Will they take that into consideration
They
when
take
they're
that into
working out
consideration.
the multiples?
Yeah, but they'd also take into consideration, for instance, I might buy a prop or something off you,
Yeah.
but I need less dividends than you, so
Yeah.
I'm taking less dividends and all that, and etc. So they add all that back in, because it means the less I take out,
But the dividends
the
is
higher the
more
profit is.
balance sheet, the reserves, rather than P&L, profit and loss.
Yeah,
So there's a lot of
But
due
it-
diligence, and
there's a lot of dividends.
different lenders have different scopes on this. So would you go for business to a specialist lender rather than a mainstream bank, I assume?
It is, I would say, from a broker point of view, go to a broker
First.
because then they're able to go to a high street bank, a non-high street bank, and get you the best deal for you. So, for instance, like some lenders, when you're doing like maybe a management buyout, they would want to see 3 years worth of accounts, and they would take the aggregate of those 3 years to determine what loan to value they're lending you.
Right.
Some would just take 2 years, and depending on the strength of maybe the last year,
Yeah.
determine the loan to value. So
How
different
quick?
lenders look at different things.
How quick? And this is my last one because I know Grafton like me's had a long day. How do you get offer in principle, and how quick can you turn that around?
Offer in principle is pretty quick. You can get, for depending on the size of the deal, within sort of 5 to 7 days, an offer in principle, decision in principle with the valuation ready to go out.
Got it.
The length of time taken when it comes to property or even management buyout is all the solicitor bits afterwards.
Takes a bit longer.
That takes longer
So you
because
may have to
a
do
lot
it
of
in
due
2 stages.
diligence has to be done. The solicitor has to consider the director's agreement and all that in place. It's the solicitor stuff that takes long. But getting a lender to agree to a decision in principle and even getting a valuation out, 3, 4 weeks maybe.
Wow.
The rest length of time is when, because most of them will not instruct the solicitor until the valuation comes back, and that's in place.
Right. When you say valuation, you're talking about Rick's valuation on the property, because a valuation would normally probably be an accountant, business advisor would give it on the business,
Yeah.
and the Rick's valuation will add into the net asset.
If there's a bricks and mortar, then they want a full.
Got it. So there's loads of different components.
There's loads of different things here.
Grafton, as always, thank you for adding so much value. Gotta love seeing West Property Meet.